Record. All right. It's been a while. It's been I don't know, a week, something like that. Already did my charts by accident, so I'm not gonna do an entire top-down analysis. I'm just gonna do my forecast. Oh, these are still on there. Let's see if I have any other what's it called? Call outs, text balloons, not that I know of, because I removed everything. Oh yeah, because I already did breakdown earlier. So where are we? And that's it. Let me check something real quick. I told my friend to not along here. I followed his trade, and there you go. But anyway, so let's do a breakdown. Let's do a forecast. Where can we go? Where's my sticky note? Because I want to do a proper forecast. Did I throw it away? No, maybe I did. Uh, did I really throw that away? Used to use that for my breakdowns. What's this? Hmm. Okay, I can't find it. Anyway, let's start on the weekly. Let's form a bias. Let's see where we are, where we can go. So these past few weeks, we've been coming down here into our, I think it's a 4 hour block. Yeah, it's a 4 hour block. So past week, we have been coming out into the 4 hour block, and there's not much liquidity. We took the liquidity here from the upside. Let me go back to the daily over here. So we took that internal liquidity in the form of these highs, equal highs. Then over here, we got some inducement shorts, inducing sellers into the market. Before that, you can maybe say like those are support and resistance traders from this key level. But in that way, like they got taken out, we wicked through, and then on the daily, we can see that wick. And we closed that week fairly strong, or very strong bearish. As you can see, there's no wick to the downside. So buyers stayed in control, followed by that week after. And then we got an indecisive candle, not telling us anything besides that we can potentially slow down. And then that one was taken out by last week. Was it last week? No. Yeah, last week or 2 weeks ago. And then this is last week. And if we go lower, we can see the price basically came, or 4 hours, sorry. We had this internal structure that was this indecision. You can see it's like a ranging market. So we break down, we got this bear structure, then we break above these highs, grab liquidity, tap into this daily fair value gap that sits over here. So from this high down to this low, we can see the price taps into the daily fair value gap. Sorry. And then turns bearish. Daily wise, where can we go? So we got liquidity here to the downside. I changed my liquidity to a line. I might change it back later to the dotted or the dashed or whatever it's called. But we broke bearish, so we still have this bullish, or we broke bullish, so we have this bullish range now from this low up to this high. We can see this green line all the way over my screen over here, which comes from the weekly, and we tapped into the premium of our weekly range. So, but that's pretty minor, in my opinion. It can be a strong level based on the daily understanding that this is our first bullish break on the daily after we came down, and we have some liquidity here to the downside. So if we now continue down and we don't react from the areas over here, we can take out this liquidity over here, break bearish again. So fake breakout and then bearish and then break bullish. Then our weekly range becomes realigned with our daily range. So this will then be our new weekly high, and over here will come our new weekly low. Where is it? So like that will be a new weekly low. And then from that perspective, if we assume that we don't assume anything, but just for the sake of this, we assume that this will happen, then I'm expecting something like this. Why? Because dollar is becoming weaker and will become weaker in the future, especially with crypto and everything and the regulations and just the printing of money. Eventually, if they find something better, I think there will come something better than the dollar. So, yeah. So from a daily perspective, we have this bullish range, but as I said, there's no internal range liquidity. So going down to the 4-hour, we can see it better. Thank you, line thing, go away. I expect price to continue with this most recent bearish range. Whether we go deeper into that range, something like this, because we have this bullish range. Let me go deeper first so you can see what I mean. Yeah, the high, low, lower high, and then this was a lower low essentially, but using this one, we get a high, low, shit, high, low, lower high, a lower low, a lower high, a lower low, a bullish break, and then we start forming this bullish structure. And for now, we respect our bullish order flow over here. So from this area, same over here, respecting that 1-hour block. So if we continue that, then we can see price maybe retrace deeper into our into this range. And I got my areas marked out. I will look for a trade from every single one of this level. Why? This 5-minute, because it has a disruption of highs over here. If we go to the 5-minute, I can show you that as well. So we can take that out or take out the liquidity that sits below and then get a short from that area. Yeah, you saw the disruption. I'm going a bit fast, but it's for me anyway. So I see that happening. On other feeds, we can see that bearish candle, that last bearish candle. This is my crypto watch list. There you go. So we can see that there's no such strong candle to the downside. There's no such thing as that strong candle. Oh, that's wrong English. There's no strong bearish candle on the other feet, and same goes for Wanda, Euro US dollar. So let's check out Wanda. See, so that's pretty interesting. But weekly open will tell. So let's just wait for weekly open. Actually, I don't wait for weekly open. I just go to sleep and then see what price did in the morning on Monday, because changing some things in my strategy. We'll be trading only on Monday morning or London in the morning. And for my lower time frame strategy, and I'm working on a higher time frame strategy as well, which I will use just whenever the entry presents, but it will be more hands off, so I don't need to like focus on the charts that much. So focus wise, we can forecast it like we got liquidity to the downside here. We took some internal range liquidity. Is it enough? Well, for now, we respect this bullish order flow. So this bullish structure. So we can maybe say the price will come deeper, take out these highs, this one, this one, this one, and I will then look for shorts. First of all, from the 5-minute area. If that doesn't happen, I'll look for shorts from here. And otherwise from here. I think this one is decent, but this one is better just because it has that strong impulse to the downside and also has liquidity in the form of like a oh, my charts are still on, in the form of this London session closure candle here. So this was formed during London. So yeah, that London high there, and also this London high that, so you get like this. Let me show you, like this trend line thingy. Just this group of this pool of liquidity. So I could see that happen, maybe come higher, and then react from here and continue down, because my overall bias is short. It is still short because there's no liquidity here. Maybe price is now engineering liquidity, so it can like with this bullish break, we engineered some liquidity in the form of this low, but I don't think it's enough to hold this entire range, if that makes sense. So I see price still coming down, whether it's like this or just a straight continuation down, and then like something like this, maybe in this line, these lines. So break bearish on that level, and then we get, if that happens, we have a new. So this is our high, this is our low. Red. This will be our new range, something like that. Maybe before taking out that high or that low to the left. So taking out before taking this low, then we can look for shorts from this area. However, we have our previous daily highs or previous daily lows, previous weekly highs or previous weekly lows. Wait, is this 1 week? Oh yeah, we open here. They're pretty close. So I think price might as well take first weekly, take out the weekly, then come above this high, react from the 5-minute PY, and then take out previous weekly lows. That's like my ideal forecast, and that's what I see happen. Trade wise, we can then look for shorts from here, or if we come below this red line, this or red dot area, we can look for long still, depending on what price gives us. Yeah, that's basically it. I don't have like much else to say. My bias, as I said, my bias is short. It took some internal range liquidity, got liquidity to target. What else is there to target? What if we come below, by the way? Then we have some areas over here, maybe we can look for. So let me just do this and go to the 1 hour. So what else is here? Is below there. So this seems quite mitigated. Yeah, this is mitigated. So then we would look maybe longs from below this low. But in the meantime, if that happens, price will form enough price action, I guess. I hope so. That we can like look for trades. Like maybe price comes below, takes out this low. Then we got our range from this, or our light blue range realigns with our dark blue range because they get the same high and now the same low because we never reached discount for that light blue range, as you can see. So maybe those align. So if we continue down, they will align, and we can maybe look for high for like 50-minute, 1 hour-ish, to create something like this. React from this fair value gap over here. I will plot that on for myself. Ooh, that's mitigated on the 4 hour. Let's just take that low, and we will maybe look for shorts below that. I will, after this forecast, I will go deep into this and check what areas we can trade from, but that's for me not really necessary to cover. But I will maybe look for something like this. Below that, take out the liquidity. We can see we have our 1 hour fair value gap over here. So maybe get a reaction from there and then continue up because we get these strong candles that broke out this high. So that's a good area, and also disruption of sorry. Disruption of lows. Why? Let me mark that out as well. That's a low that led to this high, which is higher than this high. So we got a high, a low, lower high, lower low, bullish break, bearish break. Although this low didn't reach a premium of this bearish range, it's still a valid like disruption. And let's mark that red. There you go. So that's something I would look for to trade if we get below. But there will, as I said, like this is 1 week of price action. So either we need a strong sell-off or this will take another 2 weeks, maybe 3 weeks before we are at this point. Actually, 2 weeks, something like that. But it depends. The blue one can also play out. The blue one can also be this one come up and then we react from here. Though we have to slow down. I don't know. I think this will be like short inducement of buyers. If we go to the daily again, what else do we have here? We can see we have a key level over here. This is actually, I think this is from Innovation Markets that uses this. These key levels. Shit, I just said that on the forecast, my bad. But yeah, so we got a key level over here, and our fair value gap lines up with this key level over here. You can see the big move came from here. The move came from here. Then here we got, like, if we refine it and make it a bit bigger, you see that this move also came from that area. So yeah, we can maybe trade into that, or even now that we have that, like, retail traders look too long for that, although it's on the daily, so it's a pretty strong level. We can maybe a closure below, fake out retail, so-called retail, but people that use support and resistance for breakout shorts, and then if stops above and then we turn around. But we'll see. We can actually refine that to that. And then you can see over here, we got a minor reaction, another tap in. If you go to the 4-hour, you can see more. See, tap, more taps, movement up, down, and then continuation. Then we never came back to that area. So yeah, this is my forecast slash talk slash whatever I'm doing here. Enjoy.